Hello. The topic for today's discussion is regarding real estate investment in India. India is a land of opportunity, and for NRIs especially, they are having their deep sentimental connect with India, land of India. So, the first question that I would like to start with is whether an NRI can really invest in Indian real estate, or are there any restrictions for that?
Well, the simple answer and one word answer is yes. So, broadly speaking, yes, they can invest into Indian real estate, which is, say, they can buy any number of apartments, plots, houses, commercial spaces, whatever they want to buy. There is a general permission under the Reserve Bank of India regulations that they can invest into any type of real estate. But having said this, one needs to keep in mind that a non-resident Indian cannot run or cannot do any business of real estate. Right? So by that what I would mean is we can invest but we cannot trade in real estate. Buying and selling of real estate is not allowed for non-resident Indians. But if you buy, you hold, and then after a certain period of time you sell, then it's an investment. But that active buying and selling of real estate is not something which a non-resident Indian can do. Then a non-resident Indian can hold agricultural land which he was holding before he became an NRI, but he cannot buy any agricultural land after he is a NRI under FEMA. So the moment he is a non-resident Indian, he cannot buy any further agricultural land. But he can receive agricultural land by way of inheritance. But as I said, and I again repeat, they cannot buy any further agricultural land. Otherwise, they are all free to invest in Indian real estate.
Okay, so that is possible. It means that they can invest into real estate.
Yeah.
So, can you please explain what are its investment rationale?
Well, the moment you look at an investment is connected with need. So, what is my need? And that is the way I need to plan my investments. There is one set of NRIs. For them, investing in real estate and that too of a certain type is their need. So, for instance, so many of our NRIs are in the Middle East, in Africa, and some other jurisdictions of the world where they are not permanent citizens. They don't hold passports. They are not structurally there. Yes, sir, they stay there for generations, but they don't have a right of citizenship. So the obvious thing that they feel and that comes up in their mind is that someday, God forbid, I need to return to my country of origin, which is India. I need to have some real estate where I just can be there if there's something going wrong. So for them, that there is an investment need to have real estate in India, which is like apartments, commercial spaces, offices, or whatever. That would be as per the specific requirement of that particular NRI. Now, when it comes to NRIs who are predominantly in the Western world, which some places we call as developed markets, they in my broad understanding and experience is that those NRIs, they might have a lot of affection for India, but they don't return to India. Their subsequent generations also don't resettle in India. So for them, the need is only the return part of it. what is the return that NRIs or that NRIs of that particular set of countries, there's a Western world would really make out of the investment into real estate. So if we are looking at something purely from a standpoint of returns, then one also need to keep in mind the, let us call it as hassles which are involved keeping or maintaining real estate in India. We need to see that there is a safekeeping of it, there is an issue of maintenance, there is a cost of maintenance. If you are planning to dispose of that real estate, then there is a lot of effort which goes into that entire process of disposing of that real estate. And on the top of that, whatever are the proceeds which are received on the sale of that real estate would get credited to the non-resident ordinary account. Well, there are certain concessions which we can discuss, but then basically it will get credited to an NRO account, which is a non-repatriable account. So these should be the considerations while allocating any investment into real estate. And to add to that, either in the Western world or maybe the Middle East and Africa, the next generation, they are not very much interested. You like it or not, but the fact is that the next generation is not very much inclined to manage and take up the hassles of real estate in India.
Okay, thanks, Mr. Kothari. Sir, can you please also tell us about the tax provision of investing into real estate?
Okay, so the taxes, or rather the way the taxes are levied on real estate in India is that if an investment into real estate is held for a period of anything less than 2 years, it would qualify short-term capital gains, and it would be taxed at a slab rate. And if those investments are held for a period beyond 2 years, then it would qualify to be long-term capital gains. And as far as long-term capital gains are concerned, the way the taxation works is that whatever is the cost price, there is an indexed cost price which is worked out. From the sale consideration, the indexed cost price is deducted, and the net amount of gain which is subjected to taxation at a rate of 20% plus surcharge. That's a flat rate of tax. And the way the withholding tax or the tax deduction of tax deduction at source, TDS, the way it works is that as such, when an NRI is selling any real estate, the entire sale consideration comes under the ambit of TDS. So in that case, he needs to go for a lower tax deduction certificate from the income tax department, which the entire process can be carried out online. So this is the way, broadly speaking, the real estate taxation works.
Okay. So as you mentioned earlier that whenever NRIs are disposing of the property, the funds are going to the NRO account.
Yeah.
So I would definitely ask you that how we can remit that fund back to our local country, or home country.
Yeah. That aspect is what you asked is quite very important. So what happens is that the monies would get credited to the NRO account, right? So now the first thing, that if a real estate or a residential property, to be precise, is purchased out of monies which are paid at the time of purchase from either an NRE account or by way of remittance, to the extent of 2 houses, 2 residences, whatever be the amount of sale consideration that is received, those amounts will get credited to the NRO account, but then those amounts can be remitted outside of India, obviously after the payment of appropriate taxes. So that is irrespective of the whatever is the amount which is received on the sale of those 2 properties which are purchased out of NRE or convertible foreign exchange. Right? Now, if beyond that, whatever are the real estate amounts which are credited to the NRO account, there is a Reserve Bank of India scheme under which an amount to the extent of $1 million per person per year can be remitted outside of India after payment of appropriate taxes on the amounts which is contemplated to be remitted. So, under that $1 million scheme, whatever are the sale proceeds of this real estate, they can be remitted. So, this is the way the remittance can work. So, broadly speaking, yes, non-residents can. They are all welcome to invest in Indian real estate. And these are the pros and cons, and these are the nitty-gritty which the non-resident needs to examine within himself, that whether I should be taking an exposure into real estate in India or not.
Thank you so much, Mr. Kothari, for giving your views on this topic, which is on real estate investment in India. Thank you.